becomes an old tale,
Yeah.
but it's the truth. Technology has really shaped access for lots of us. There are very many platforms available that you can use to invest your phone. Even with a feature phone, USSD,
Yeah.
you can open an account to invest in government bonds, unit trusts, equities, and all the lot. So by buying a security, for example, be it a government security, you're actually investing with the government, so the government can provide services and pay you with a return on your money. And even with avenues like equities, if you save your money to buy a stock, you too are investing in that stock and you're investing actually in the economy. I think the first point of alleviation is one, it's better to own a small piece of something bigger than something very small. Owning, let's say, a company worth 10,000 shillings is not comparable to owning 10% of a company worth 1 billion shillings. I think it's a very important number for every business owner to know beforehand. Every time you go to bed, you should be knowing what my business is worth at this point. I think the biggest risk to our current environment is really not here. It's geopolitics. So with 12,000 shillings, you can start your journey buying shares in Airtel, a very big company here in Uganda. To not just you look at it that, oh, Uganda is small, and say, I'm not going to invest here. There are opportunities here at home, and it's better to invest in a country you understand, or your own country. The figures are around a total amount of about 700 billion that was raised from the public by MTA. At listing, the share price was 200 shillings, went up to 205, dropped a little, but now it's about 470 shillings. So there's opportunity for growth. So if I had invested, I bought some shares in MTN at IPO, right now their value is more than a double. The first one is around investing in shady, non-regulated
Yes.
avenues. Someone's asking you to collect money. We are doing this, but they are not licensed or regulated. So you don't have a fallback position. You will lose your money. Debt creates pressure, really.
Dear Patriot, we've had it on the podcast before from our previous guests that Uganda is a very expensive destination for capital. And we've also had other guests telling us that there's capital within Uganda. There's money within Uganda. We have our own investors here. So are you working your first job? Are you earning a monthly salary? Where can you play parts in this equation? Or where is your participation appetite? Or where should we place you in this equation today? And we're in luck because on this segment of the podcast on Uganda, the segment on sectors, we're going to be speaking to a gentleman, a financial analyst, but also a revenue analyst here in Uganda. And he's going to be telling us exactly how you fit into that piece. So welcome to the podcast, Isaac Kayemba.
Thank you.
How are you feeling?
I'm good.
Yeah?
Thank you. I'm excited for the
Yes,
conversation.
it's so exciting because
Yes,
you're
yes.
young as well, and our audiences who are the patriots are pretty young people.
Yes.
28 to 44 is quite an extension, but yes, a lot of people are young. People have their
44
jobs.
is still young.
44. You know, they say that Ugandans, we like to stay youth, you know,
Yeah.
like some people, especially those running for office. But even if they've passed the youth age, they still consider themselves as
young.
youth.
Yes, yes.
But I believe the patriots are those people that want to change this nation, contribute to the economy and its growth. And since you train a lot of businesses on being investment ready, on finding capital, what are you analyzing as an analyst right now? What's the market like at the moment?
I think as introduced, Isaac is my name, from the Uganda Securities Exchange. I think our economy right now is at a good place, I could say, our macroeconomic environment.
Yeah.
The Bank of Uganda has managed to stabilize our currency, our of goods.
Yeah.
So inflation is at quite a low level. Interest rates still high, but at least they are stable. You still have some issues here and there regards to access to capital, the cost of credit. But I think Uganda is a growing economy. You can see it from the rates at which it's growing at, the prospects that we see in oil and gas, mining sectors, and those that already exist, real estate that are growing rapidly, agriculture, and the ATMs, as the government likes to call them. So I think the best lens to look at Uganda is a growth country, both in terms of population, but also the economy.
Yeah.
Yes.
And what are the trends you're realizing or identifying as important for us to take note of in terms of what are people excited, or what are the signals that are helping investors know, okay, this is where I should probably put my money, or even Ugandans, because predominantly Ugandans were not investors here, but what is helping them, open up?
I think the primary factor is technology. Becomes an old tale, but it's the truth. Technology has really shaped access for lots of us. There are very many platforms available that you can use to invest your phone. Even with a feature phone, USSD, you can open an account to invest in government bonds, unit trusts, equities, and all the lot. So the most important one, in my opinion, is technology and access. I think the other one is information. A lot of these products were not really known or out there for everyone to know what they are and to learn from them. But that information has been pushed onwards to people through different channels, and learning has become less costlier than it used to be. So with a call, you can easily get information about a particular asset class and then start your journey towards saving your own money and investing to be a part of it.
And like we noticed that the Ugandans are, we have such a young population, 70% of them are still under the age of 30. And some of these are actually working, they're making money here and there. How can they be a part of this whole ecosystem or be a part of the contribution? Because we have heard that we don't have the savings culture, but I want to believe that it has grown. It has grown, we save, but we are not investing as much. And government is banking on our investments to grow the economy, but we're not doing that as much.
I think the first bit is knowing where to invest, and then you can look for access to where to invest. If you speak about youth, youth comes with growth, comes with new opportunities, comes with learning, and then growth sets the stage for how much in terms of savings can we have as a nation. As the economy grows, maybe more jobs are created. I think you have people get into the employment space, you start earning, saving part of your earnings, and then investing those earnings into the real economy. So by buying a security, for example, be it a government security, you're actually investing with the government, so the government can provide services and pay you with a return on your money. And even with avenues like equities, if you save your money to buy a stock, you too are investing in that stock and you're investing actually in the economy. So I think the whole story starts from growth, us starting early. I think the culture will definitely improve as we grow, as we go along. Growth comes with learning new things, creating new structures, creating new products for people to be able to invest in, new avenues for business that did not exist previously in the country now exist. So such elements give opportunity. I think unit trusts are a very clear example. They weren't really known to the masses. We've seen tremendous growth with that message being preached, and now people are starting to invest there. So growth, knowledge, and I think we'll be able to reach where we're going.
Because Isaac here does train a lot of business owners, tries to get these businesses ready for investments or to get them to get some capital to run the business. What is top of mind of those entrepreneurs when they're looking for this capital?
I think scale with capital. Capital brings scale. You're able to invest in opportunities that you otherwise have invested in if you didn't have the capital. So forms of capital, I think, are clear. You have your debt, you borrow money, be it from a friend, from a bank, from an institution. You go on to invest in your business, and maybe you had a manufacturing plant, just have more production lines, for example.
Yeah.
If you are making clothes, for example, buy more material and all that. So that supports you in scaling up or growing your business. Now, the other form is equity, and equity is really ownership, selling a part stake in your business, and then that gives you the opportunity to have someone else on board to support you with a capital, but also expertise
Yeah.
to grow your business. They could be an institution, an individual, or any form of entity that is willing to walk your journey as a founder, as an entrepreneur on. So really, it starts from that area. You need capital
Yeah.
to scale. Where do you start looking for it? Are you ready for it? Is the business worth that capital? Is it making sense to you and also your customers or your clients? And once you have all that structured, you're then able to have capital and scale or expand.
Yeah. I was speaking to somebody, especially with giving ownership away. I was speaking to somebody who actually told me, please ask him a question around, how much do I give away?
Yes.
But people seem to be scared, especially young people. They seem not to have an idea on what the possibilities would be. But me, on the other hand, it feels like you've mentioned, you're bringing on expertise on board, you're bringing on a different component of the business that you wouldn't have normally. But what would you tell those people that they have to benefit from giving away part of their ownership of their business?
So the worry starts from, will I be able to control my business? I think the first point of alleviation is, one, it's better to own a small piece of something bigger than something very small. Owning, let's say, a company worth 10,000 shillings is not comparable to owning 10% of a company worth 1 billion shillings.
Yeah.
Because that comes with greater value. So
Yeah.
having more people on board to grow your business is the right step to take.
Yeah.
The other bit is ownership comes with rights. And when you're getting people on board, is you negotiate those rights. The first I can talk about are voting rights, voting on the direction
Yeah.
of the company. You can agree with whoever you bring on board that you maintain a specific percentage of the voting rights so that you can be able to steer your business in the direction you would want it to go towards. So voting rights are a key one that are negotiable in shareholder agreements that you sign with people that you're bringing on board. The other bit is a controlling interest. What percentage should I give away? It depends on what is the value of your company. I think it's a very important number for every business owner to know beforehand. Every time you go to bed, you should be knowing what my business is worth at this point. If I try to sell it on the market or private or public, how much would I get out of it? So if my business is worth 1 million shillings, for example, and I gave away a 20% stake of that business, that means I'm going to raise about 200,000 shillings to invest in my business. Now, the new shareholder is now my partner, and of course, we agree on the direction of the business, how we are going to make money, and that sort of business. But there are two things. There's a majority stake or majority ownership, and then controlling interest, really. Is if you have more than 75%, you have a controlling interest within a business because you own a large part of it. But you can still maintain a majority stake and keep raising capital. Or you can go as low as 20% ownership in a business, but you still maintain voting rights in that business. So whatever worry anyone could have depends on how do you agree with the people on board, what is the value of your business, and how much value are you willing to give away for capital. Because a business is as good as how much it's going to generate in the future and what does it own at the moment. So if you can't have that number, then you can know that I can bring on more people to create more value and then expand or excel in many other ways.
Yeah.
Yes.
And in creating that value, do you think the environment is supportive?
As we stand, I think I had earlier mentioned our environment is stable. I think the biggest risk to our current environment is really not here. It's geopolitics and the wars happening across the globe that could affect inflation and currency risk and all other things. But I have a positive view on our country. There are opportunities around. We are growing, but in many industries, of course, there are challenges because as we move towards a certain stage in our economy or middle class, a bigger middle class, you might find constraints in finding the right customer fit for your products. But
How
it
so?
doesn't take away the opportunity because with a growing population and in terms of income, with a population whose income is growing, you have more people with disposable income or ability to consume or spend. Now that clearly affects businesses because if people don't have the liberty to spend, then they're not likely to buy certain products. So it depends on what product specifically you're trying to sell. But if that product can exist within a specific stage, makes it easier for you to sell the product. But I do believe our economy is quite progressive. There is opportunity if you're looking in the right places. Yes.
Yeah. Now, Isaac, our patriots who are watching right now, they normally think, the English we speak, the terms are too technical.
Yes.
Practically, right? I would want us to help the patriot understand this concept better. Now, they are earning a monthly salary. What are some of the shocking things that people like them find out from where you stand? Like the knowledge you have, the insights you're sharing on a daily at UEC. What Uganda Securities Exchange? What are those things that they take pride in after knowing? Because you talked about knowledge also being a part of the growth.
Yes.
But what is that knowledge that you probably think they don't know? And if they knew, they would be happy about it. They would be appreciative they knew about it.
I think the first one is actually knowing that Uganda has a stock market in the first place. I think when you mention the word stock market, people think about the New York Stock Exchange, London Stock Exchange, NASDAQ or Tokyo, and figures moving rapidly every second of every ticker you're looking at. The price of Tesla, for example, or the price of Microsoft or Alphabet moving up and down like every single day. So it's the first one is that finding out that Uganda actually has companies that you can invest in and for a very low amount. I think the minimum you can buy is 100 shares. For example, Airtel's price is about 120 shillings. So with 12,000 shillings, you can start your journey buying shares in Airtel, a very big company here in Uganda. So that's really the first bit, knowledge. Know that Uganda has a stock market and there are companies I can actually invest in. And then asset classes, because equities is one area that also has its own forms of return, forms of risk. So it's one to look at. And then you look at the rest too that are available. Fixed income, meaning you're going to invest, but earn an interest, a specific amount in interest, and then also get back your principal. The government bonds are available for that. Corporate bonds, not any at the exchange at the moment, but soon there will be more corporate bonds. So corporate bonds is also one to look at. You invest your money with the government, then earn that interest and get your principal back at maturity. The other one to look at are the unit trusts. Now with unit trusts, you have a professional investor with a specific portfolio. So invest your money within a portfolio. The investor or the portfolio manager has the expertise to invest that money and get for you a specific return at the end of the year. So those are some to look at currently in our market, but more products are coming. And as I mentioned, we are growing, we are innovating. So ETFs and the likes will be available in the market soon. So there's some to keep the lookout for, to not just you look at it that, Uganda is small, I say, I'm not going to invest here. There are opportunities here at home, and it's better to invest in a country you understand or your own country. And then once you have that expertise, you look elsewhere to invest your money. And then slow but steady progress. With, I know we like to see volatility.
Yeah.
Today it's up 10%, tomorrow
Yeah.
it's down
Yeah.
another 5, tomorrow it's up.
Yeah.
Yeah. And you might not see as much rapid movement in Uganda, but it doesn't mean that you don't own a stake in that company.
Okay, no, that's quite interesting, especially the way you brought it up. Now, I don't know if they find that shocking or interesting. That's really for them to decide. But yeah, so going forward, like you talked about technology, especially in innovating around the different avenues people can invest. And now I wonder, from your perspective, if there was something that can be changed or something that can be improved in terms of policy, what would be your recommendation?
I think from a policy perspective, giving ourselves the chance to invest in the real economy, is there a possibility to have more companies listed on the exchange? More companies are raising capital from the public markets, more individuals, more institutions accessing the public markets for capital formation. Because if those avenues are available, then you have a mechanism which an exchange provides for me to be able to route my savings towards a specific investment that I think is going to perform well. So, in terms of policies, creating incentives for companies to go towards the public markets, and those could be around tax incentives, around people who earn an income from investing in the real economy. If I am a local investor, I might not have millions of dollars, but
Yeah.
even with my small savings, I'm able to provide capital for a local company to invest or to build the real economy. So I think it's that acknowledgement that we have local pools of capital providing incentive for the possibility of access and incentivizing companies really go public, be able to access capital from the public,
Yeah.
but it also provides incentive for us to grow businesses that are properly structured in terms of corporate governance, being aware that they are operating within a community,
Yeah.
ESG and all that. And then also it's public, really. I think taxes become a very sticky issue when you speak about going public or everyone knows my business. But at the end of the day, it's supporting with scale. If we are all aware that there's possibility to have an investment in your company, and then the company is performing this way, it is being managed this way, it's producing this much, then we grow together, really.
Yeah.
It's creating avenues for us to boost our real economy with domestic savings.
Yeah. Can you give us an example? Like bring it to life. A
Yes.
real example of businesses you've worked with that have scaled and seen and projected that growth you're talking about.
I think I will speak directly to companies that are listed
Yeah.
on the exchange.
Yeah.
But if any of the listeners is going to invest, they need to seek professional advice.
Yeah.
Because it could be a bias that maybe I hold
Yes.
some securities in those companies.
Yes.
But a very good example are the telecoms. The telecoms are listed. So when they are going to market, they sell part of their holdings,
Yeah.
or
I
they
remember
sold.
when they
yeah.
they made a call for MTN and everybody was thinking it's a joke. Yeah.
yeah,
I remember
turns
they were-
out it wasn't.
Yeah, it wasn't. No, it
Yes.
was. And now people are laughing to the bank, straight to the bank, and here
Yes,
we are.
yes. So MTN is a clear example. They had their IPO, it is initial public offer. They offered securities to the public. People were able to invest in MTN.
Yeah.
They raised some money. That money, I'm certain they used to invest in their business. And they had a subsequent offer.
Yeah.
The public. If I'm not mistaken, the figures are around a total amount of about 700 billion that was raised from the public by MTN. At listing, the share price was 200 shillings, went up to 205, dropped a little, but now it's about 470 shillings. So there's opportunity for growth. So if I had invested, I bought some shares in MTN at IPO, right now their value is more than double. So my money grows as MTN actually grows. Because if you see their numbers on an annual basis, you see that the growth in subscribers, growth in data,
Yeah.
data,
Mobile
mobile
money users
money
as well.
users, the fintech arm of the business. So you see that if I am an investor in MTN, I'm actually part of their growth.
Yes.
I don't need to sit wherever they sit or even know who, though you need to know who the management team is.
Yeah.
But if I am invested in MTN, I gain if they grow. So a very clear example is if I was a business owner, you take your business to the markets, you get capital from the markets, but the people you're bringing on board are actually growing with you. That's how really the real economy grows. Investing our own domestic service investments in businesses that we grow from the grassroots and earn from them, even as they earn from us, because MTN's revenue comes from Ugandans. Yes.
Yeah. And like someone rightly mentioned on this podcast, that the capital is within.
Yes.
The capital is within. Are there any examples of the capital is within that you have that you know of?
Yeah, the
Capital is
clear
within.
one is NSSF. If we are employed, we save with NSSF, and those that voluntarily save with NSSF. NSSF is assets under management of about 26 trillion, give or take, ballpark figures. But NSSF is invested in MTN to pay them a dividend on an annual basis or 3 times in a quarter, like MTN has been doing in the past. NSSF has holdings in very many companies listed on the exchange.
Yeah.
The other example are the unit trusts. Unit trusts are pooled investment vehicles. If they pool that money, then the manager has the ability to choose an investment. Like, let me pool this money and invest it with the government. So those pools exist. And then you have pension schemes that invest people's pension, provident funds that also kind of related to pension. But those pools of funds exist. Plus, ourselves, my savings too, are part of that pool. Though mine might be a little bit volatile.
Yeah.
When you get your money by the second week of the month, life has happened, paid a couple of bills, and it's not as much as
Majority of
it's
that,
like.
and that is the
Yes,
majority of the part here.
but you remain with something, and that something can be used to invest in the economy. So as people say that, oh, the money is not there, the money is actually there locally. And if it needs to be gotten from a foreign entity, there are avenues to support that too. But I think it's preparedness. If we are prepared to receive that investment, because it comes from corporate governance, are you structured in the right way? Because the primary question is, am I going to give money to the CEO and the CFO, and tomorrow they are driving new vehicles?
Yes.
And all the investment is gone. My money is gone, and that happens a lot. So in order to meet the diligence checks, the business has to be structured in the right way. Yeah.
And from your experience, does it have to be a specific number of years in operations?
I think we have a segment on the exchange called the Growth Enterprise Market segment. It hasn't been utilized properly,
Okay.
but even a company incorporated within a year has the opportunity to raise capital from the public markets.
Yeah.
So it's not about time. The only disadvantage is most times, I wouldn't call it a disadvantage, but what happens is the norm is people ask for a track record, prove that you've actually earned revenue from this product. Makes market sense or is marketability, so you have a record of revenue. And in other extreme cases, people require that you have a net profit for the past couple 2 or 3 years to be able to raise capital. Less than a year to 20 years in existence, you have the chance to raise money from the public markets. Yes.
Okay. And tell us a little bit then about the Securities Exchange. I feel like, yes, it can be so technical,
Yes.
but in terms of helping, because this podcast is about achieving a middle class economy. Now, I wonder from where you sit at the Securities Exchange, what do you think then it's going to take for Uganda to achieve a middle class economy with the work you're doing and with if everything goes right? the way you've suggested it to the policymakers. We talk about all the positivities, but where is the volatility?
Okay. So just to the exchange is Uganda's principal stock exchange. We are licensed by the Capital Markets Authority. So they are our regulator, our primary regulator. So what stock exchanges do, or securities exchanges, is they are financial markets intermediary or capital markets intermediary. Support the transfer of savings from individuals and institutions to companies and governments that need that capital. And then the other bit is supporting capital formation, but also wealth creation. Because once these securities are listed on an exchange and trade, they are able to find their price point or the price point on the market. So price discovery. You list a security at a specific price and the market prices it at, oh, these holdings in this company are worth X amount. Of course, because it's a market, you could think that your company is worth X and then the market decides otherwise. So that means even the initial investors lose money. So there's risk, really. There's also, you talk about return, but risk also exists. And risk really is driven by, is the company performing well? What are the conditions within the economy that support progress for some of these companies or future prospects? If you believe the company might not exist even a couple of years from now, you will see its share price moving. So a lot of things, regulatory, market related, business related, drive share prices up. So there is an opportunity to make money, but you can lose money also. But where the exchange exists in terms of driving growth, driving Uganda towards a middle income status, supporting that investment in the real economy. If the government needs to borrow money from savers, they have securities listed on the exchange, and through different mechanisms are able to route money from the public towards their projects or their budget. And if companies need to raise capital to expand or to grow, there is an avenue within which they can do that. So the exchange really is a conduit to drive us towards that status, or where we can invest our savings and have them grow so that we earn more in terms of income as go towards the middle income. The status is to encourage really investment in the real economy. By real economy, we mean the actual businesses and the households.
SMEs.
SMEs. SMEs are MSMEs and SMEs. Because if you had a number of companies that are locally built and grown, go towards multinational enterprises, there's a direct impact towards that. You see a couple of companies coming from South Africa, Kenya, setting up here, and it has a trickle-down effect towards their economy. So if we can grow a couple of those here, I think that will propel us towards that status.
Yeah, and even with like a weak forex exchange or probably growing state of the country, you'll still see that there's people who are trusting to invest. Now, for those people who are hoarding their money, keeping their money, because there are those people who keep their money in their houses, right?
Yes.
How do they trust that their money is going to go to the economy and still come back to them? Like, do you think that's still a valid worry that people have?
It's a valid worry. Why? Personally, I think we invest with ourselves, our emotions. If you feel that something is not right for you, you're likely not to do it. However, that worry is alleviated by the fact that the markets are regulated. If you deposit your money in the bank, the bank is regulated, it's licensed by the Bank of Uganda. They're supposed to manage the performance and their prudence. How are they handling people's money? So the markets here are regulated by the Capital Markets Authority. Capital markets are primarily disclosure. That means if I need to raise money from the markets, I need to tell the public exactly what I'm doing. Of course, it creates a line where you need to really assess whether this person is telling me the right thing. But if you have the CMA, the CMA, the authorities regulating this entity, this asset class, then you know that they've provided the right form of disclosure. That is the first tick off. Is this instrument listed on an exchange? That means I can manage my liquidity by selling off when I need to. And then can I find an investment advisor, an investment professional to take me through the steps of what should I consider before I make this investment? So the worries exist, but there are lots of mechanisms that exist to alleviate them. Yes.
Okay. Now that sounds comforting
Yes.
in a way. And for every episode, we normally have those rapid fire questions.
Yes.
There are two questions. One question is about the things we are currently doing, especially within your field. So look at capital markets and think, what are we doing right at the moment that's going to supercharge us into the middle class economy? And then what are those three things that we need to stop now because they're not helping us to get to the middle class economy? Let's go for rapid fire. What are those things that we are currently doing that we need to continue because it will get us quicker to a thriving middle class?
So I think the savings and investment culture has improved. We see more activity on the exchange. The unit trusts are a very good story. Government bonds have become something that people have started to take up. And I think as more products come on board, investment products that are regulated, people will definitely invest their money there. And we need to continue investing that way in our own country.
Okay.
And then the other bit is seeking for the right form of advice. I think people now understand that I need to go to a broker if I need to buy stocks. I need to see my bankers if I'm making financial decisions. I need to seek advice from an insurance company if I'm going to get an insurance cover. And I need to find a fund manager to support me in structuring my savings journey or my savings goals. And then I think my last one for the things we're doing right is innovation. As I said, we're a growing country. So finding more ways to support our savings using technology. We think we've adopted technology in a way that is even much better than other countries within this region. So technology will support with scale and also access for people from all walks of life.
Wonderful. The last one. Things we need to stop today because they're not doing us any good. What are those things we need to stop right
the
away?
things we need to stop really is one, and we are all really culprits of these things, whether we know or we don't know, we find ourselves doing it. The first one is around investing in shady, non-regulated avenues. Someone's asking you to collect money, we are doing this, but they are not licensed or regulated, so you don't have a fallback position. You will lose your money. And then I think you mentioned one, stashing our money under the blanket and hoping that we'll find it there. I think the best thing to do is take a risk, take a gamble, a calculated risk that you're comfortable with, because investment is a personal and emotional decision. Take that risk, invest in an area you're comfortable with that you know is going to grow your wealth. And then the other habit everywhere else is borrowing unnecessarily at very high rates, because that too affects our future. So you consume your future, really. You use the money you would have used in the future right now. There are good ways to borrow or to manage debt, and then there are those that really affect you in the short term, that are very high interest, that are not supporting you as a person. Yes.
So for a young business, 3 years old, would you rather they take a loan or they seek capital?
I think for a young business, finding an equity partner is the best thing. Debt creates pressure. Really. You need to pay your stakeholders, but then your debt provider is knocking the door. So having the right kind of equity partner to own the business with you, invest with you, and grow with you is, I think, the best option in my opinion. Yes.
So you talked about what we're doing right, savings and investing. And I remember this organization, so they reached out to me and said, hey, look, we want you to invest in these countries because you get like a golden visa and you get return on investment of that kind of investment. Is that happening for Uganda? Are we inviting investors from abroad with a certain fee, say 2 billion, to come and invest here?
It's
that a
not
thing that?
something I'm particularly aware of
Yeah.
for our country, but I think I've seen because Trump and his golden
Yes.
visa.
Yeah.
I don't think I'm
It's not a
aware
thing
of
for
that happening
Uganda.
here in
Yeah.
Uganda.
Yeah.
Yeah, it might be, but I'm not aware.
Also, maybe because our visa process is not that complicated. It doesn't make it
I
interesting.
think our country is it's a relatively free investment destination,
Yeah.
open to investment.
Yeah.
So maybe that's a good positive.
What are some of the comments that the investors are saying from Uganda? In one word.
I think one word to wrap up, I think organization really. If we are organized in the right kind of format, your corporate governance, you have a board, your shareholders are well represented, and your management or your team, your staff are well catered for. I think if that is done, then we make ourselves easier to invest in. Yes.
Wonderful. Thank you so much,
You're
Isaac.
welcome.
I feel like that was a masterclass on how to get ourselves investment ready, seek capital as businesses in Uganda so that we can also contribute to the middle class economy.
Yes.
Thank you so much. I know you have somewhere to be, but thank you so much for making time for this.
All right. You're welcome. It was a pleasure.